Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at cable, Aussie, crude oil, DAX and the euro dollar. Now firstly looking at cable, as you know, this market came aggressively to the downside through September based on pessimism because obviously this deadline for Brexit is very close, and still it's a lot of uncertainty what will be going on. But based on latest negotiations in the last 24 hours, we have seen some optimism coming back into the market, meaning that pair actually was able to recover above this trend line, but I still think that this is only a temporary recovery. I have to respect this reversal from September highs that actually took us below this trend line support, so I'm expecting more weakness maybe after retest of this trend line, which could happen around 1.300 psychological level, and this could actually represent also the end of this wave B or wave 2 flat correction that I'm observing around 38.2%. So I'm still thinking that this is only a temporary rise. Maybe we'll see some very sharp spikes to the upside before market actually resumes back lower. So I will remain bearish, generally speaking, on this pair as long as we are trading below these September levels. Now let's take a look also on Aussie dollar. Now Aussie dollar came very nicely to the downside. If you recall, I was looking for a drop into wave C of this wave 4, and we came very nicely back towards this 0.7 psychological level. It's a 38.2% and the former wave 4 swing highs here from based on this previous downtrend. So it's a very important do-die level. Okay, so how to look at this market from based on these latest developments? Well, market has to decide whatever will happen here. Okay, if we rise impulsively, as shown here on the 4-hour chart, back above 71.90, then I think this overlap with the previous wave 1 would invalidate any bearish impulsive interpretation. So you would say that drop was only a free wave movement, only a corrective recovery, and you will have enough of evidences to confirm resumption back towards the high. So in such case, if we would rally in 5 waves back towards 71.90, I would be willing even look for some long ideas on back towards the highs. If suddenly we see just another dip and strong drop below these support levels, then obviously I would say that we are in a higher degree corrective setback, and in such case I would be looking probably for something like this, a deeper correction and then reversal. So I think that in the next few days we will have a lot of answers. It's also very important to look at stock markets, because we know that higher stock prices or risk on sentiment in general will have positive impact on Aussie, because investors will tend to move away from the US dollar, which is acting like a safe haven when risk is coming down. So now, since we mentioned, let's take a look on DAX actually. Well, DAX has this ongoing sideways consolidation here. I think it's actually here a triangle can be placed in a wave 4, as you can see here on a left chart. On the right chart, I'm looking at the subwaves of this triangle, looking for A, B, C, D and E. So it's still incomplete pattern, but based on this current very strong bounce, I think that more upside is coming after this wave B setback. The supports in such case could be around 12,700, around there, and then watch out for maybe for a push towards this upper trend line resistance, and 61.8% is also important fib level when you are trying to identify the subways within this contracting range. Okay, so more upside here and more upside also on the S&P 500, which and Nasdaq and other stock indexes also turned very nicely to the upside, will have positive impact on commodity currencies. The only commodity currencies that I would not be looking for any bullish move just yet is probably Canadian dollar, and the reason is crude oil. I mean, crude oil is definitely here in uptrend, but not sure if this uptrend is already ready to continue after this setback towards $35. Well, we are missing this wave C here to complete wave 2 or wave B correction, and ideally this will happen in the next few weeks in this $30 or $33 per barrel. In this zone, I would be expecting a resumption higher. When looking at the 4-hour chart, we also do not have any confirmation that this wave is already in play, but if this trendline support and this 38.70 level will be overlapped, so this if you see price falling below these levels, then I think that weakness is in the cards. In such case, maybe dollar is going to recover against, as I said, Canadian dollar and Mexican peso as well. Now finally, let's take a look on euro dollar. Now euro dollar came nicely to the downside. So far only with 3 waves, so again it's a quality level here, do or die level. We are at this parallel trend line as well, and normally when you are tracking an ABC correction, that's the zone where you want to see market actually slowing down if you're tracking wave C, and this is happening so far. The bears slow down, and if we see more upside in the next few days, let's say if we see an overlap with this what is this 1.1730 up to 1.1755 level, if we can rally towards this level and then maybe even make a daily bullish close around that price, then I think that more upside will be in the cards. Of course, the most important confirmation level would be a broken channel resistance line of this downtrend. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and I will again update you in the next few days. Bye.